IVM.
Hello and welcome to a special Bloomberg Quint Brand Studio podcast around how the COVID-19 pandemic will reshape the Indian digital banking and payments landscape. My name is Ivor Sones and I'm editor special features with Bloomberg Quint. The usage of digital tools and services has surged in every sphere of life since the COVID-19 pandemic started in March. All of us have used new services as we face disruption to our lives. Especially speaking of banking, digital and contactless payments were already in their ascendancy in India, powered not only by customer preferences but also the Indian government's initiatives. COVID-19 has given this already fast growth a massive boost, as a recent FIS Space Pulse survey Q3 2020 reveals. What does this acceleration mean for the industry? And what does the sector need to do in order to leverage these new trends by providing new services as an answer to new opportunities, building new capabilities and building new levels of security for a completely new range of threats? How should these technology stacks be built, on-premise or pay-as-you-go? What will be the technology imperatives necessary to build digital frameworks that will manage this accelerated move to digital banking across all customer classes? And finally, what does this mean for the future of retail banking itself? In this podcast, we will examine all these issues from a thought leadership perspective. And to help us do that, we have Mahesh Ramamoorthy, Managing Director, Banking Solutions, International Market and APAC FIS. Mahesh has nearly 30 years of experience in banking and payments. He has been a keen leader in the transformation and growth of the franchise within the region and across key international markets for FIS. More recently, he has been key in setting up of the Payment as a Service and Banking as a Service initiative for international markets. He has led several banking digitization initiatives at the country level and is credited with the creation of a unique banking model for de novo banks in India on the pay-per-use model. Welcome, Mahesh, and it's a pleasure to have you with us today.
Thank you. Very much appreciated. Really great to have me on this call. Thank you for it.
So first up, Mahesh, I'd like to look at this entire FIS Space Pulse survey Q3 2020. I've gone through it, and it's quite fascinating how this move to digital has really accelerated thanks to COVID. So what I want to first begin by asking you is, how much has the impact of COVID accelerated this move to digital omnichannels, and what does that mean for the banking industry? What will be the new demands that will be placed on the banking industry and technology that power up the institutions that make up this industry?
Sure, Ivor. I think it's a very broad question, but let me try and answer it into multiple parts. I think, as you rightly said, India was on the cusp of embracing a lot of the digital innovation and digital payments. We started off in 2016 with the demo really helping us forcing all to get into the digital space. But the COVID has forced, I would say, in terms of fintechs, banks, and I would say everyone, the citizens in large, to be able to understand how to use digital payments and how to make sure that they are essentially being in the leading, how to manage themselves in a digital payment ecosystem. So let me unpeel this a bit. Now, when you look at how digital payments has transformed itself, earlier one could possibly never even dream of walking across to small kirana stores, or if you look at a small vegetable vendor shop, to be getting across there and trying to buy your goods on a digital transaction basis, right? Given the pandemic scare across, the acceptance by virtue of all of these players, these small-time players starting to accept digital transactions and starting them to understand digital transactions has now created that push and hence the pull to start forcing people to use the digital transactions. So which means you're now seeing that there is a fairly accelerated move at a retail level to embrace digital transactions and to use digital transactions as your methods of doing any form of payments. Now, Earlier, we used to do only online payments, right? We used to use online payments for purchase. That is to again predominantly sitting in the tier 1, tier 2 cities, or possibly in these tier 2, tier 3 cities around the train, rail bookings and everything. What's this kind of pandemic forced to change? The pandemic has forced a change in terms of acceptance. There is so much of acceptance infrastructure that has started evolving that there is more understanding that has now emerged in terms and more opportunities that has got created in terms of every citizen of India attempting to use the digital acceptance to pay for a service or pay for what they buy. This has obviously created certain, I would say, demands on the infrastructure that is supporting this kind of capabilities. It has also created a huge demand on banks and fintech organizations who support these kind of payment aggregations to look at how they deliver services in an assured way. That's very important. At the end of the day, what does a customer look at? The customer expects that he or she has convenience, and there is an assurance that the transaction is safe. What he or she does is safe. Both of these lead to what they call it as an enhanced experience, right? These two lead to enhanced experience. Now you go back end. As you step behind, you will say the person who acquires a transaction says, am I assured that this transaction is going to complete? And am I assured I'm going to get the money? Which means banks is now going to be able to make sure that if the money has to be settled to that merchant, it is settled in near real time, or it is settled with assurance that it is his money coming to that individual, right? That's important. Now, as you go behind, it is important for banks. When you look at banks facilitating at the end of the day and the back end of these transactions, these payment transactions, they will say, hey, you know what? My transactions have suddenly scaled up 200%, 300%. It has gone down at the physical infrastructure level. The ATM transactions went down, but the amount of digital transactions have taken off. So for them, they have to start rethinking about how their operations have worked. So earlier they used to have a ticket size of, say, through an ATM, one used to withdraw 2,000 rupees, 2,500 rupees per transaction, per ATM withdrawal. But today, even 20 rupees, 30 rupees is coming via a digital transaction, which means they have to put more and more resources in terms of settling the transaction, making sure their whole back office process is properly automated. And above all of that, banks now are also forced to invest in terms of risk management. I think that's a massive investments and learning that the banks have gone through. Today, if you go to any bank or any fintech who does these kind of mediation services, bulk of their energies is in terms of automation, because the load of transactions, the number of transactions have increased significantly and exponentially, to how does one effectively manage risks that are emerging from it. Today, there is an opportunity for you to, if there is anything that gets cloned out, whether it's your credentials, whether it is your mobile, how do you now manage that risk more effectively? How do I give more power to the customers for him or her to manage their transactions, right? So there are new strategies that are coming in play from the issuer side of the story. People, the banks and all those who issue the cards, issue the wallets. So they're looking at new strategies of how they create those assurance mechanisms. The acceptance mechanisms say, how do I ensure my merchants are effectively able to get assured about what they are getting is what comes into their account. X, whatever the monies that they have to pay for in terms of their subscription. Customer is looking at convenience, and today convenience is what the customer looks at, and the assurance. So I think this triaging has led to certain new asks and each of these entities.
I just wanted to take off from there, Mahesh, from what you're saying. But from a customer perspective, certainly there's a lot of change, right? How much of this change do you think will be really permanent in terms of customer behavior and therefore impact retail? But like you spoke about the volume of each transaction, right? the ticket size of each transaction going down, but transaction numbers increasing. Now, what about do you see some of those trends as permanent trends going forward, or do you think that there will be some sort of balance that will come, or do banks really have to prepare for this entirely new way of looking at things? Because if you build your infrastructure for ticket sizes being larger but transactions being smaller, it's a very different infrastructure you might have to build when ticket sizes are smaller but transactions are much more massive, and you also need to settle them in real time. What's your take on this?
Absolutely. I think good question, Ivor. I think two things. One is definitely as we continued the fact that we will continue from working from home and the travels and all those restrictions continue to exist, this would translate to a habit. This will try to become, I would say that it will become a new normal. It to go back to where we were 8 months ago, we'll probably be at 80% continuing to use digital. That's where 80 to 90% of what we do will continue to be in digital. So it is a new normal that will be now as an acceptance by the banks, the issuers, as well as the acceptors, which is the merchants. So it will be absolute. What will emerge is a more safer and a more better experience, which what bank will now start to work through. I think those are areas, so which means that you look at more mandates and everything. Those things coming in much better for us, for the customer, from their experience perspective. So yes, to answer your question, the answer is 80% will continue to remain the way it is. It's where you have gone. I don't think the return back to the cash world will be so easy.
That's really very interesting because, I think many banks will need to relook their entire technology strategy in the light of that. I also wanted to ask you in terms of, there are a lot of new technology-driven methods and processes. For instance, QR codes have been used very successfully and they've come up in the recent past, and not only in banking. For instance, they've been used very successfully in this pandemic, even for things like e-passes and all of that, currently the Bombay Suburban Railway system also. So how about some of these technologies help, which have come up and which are being used, which are making payments easier? And what more needs to be done on this front?
So yes, the way I look at it is, there was all QR codes have been very widely accepted world over, right? However, there are huge advantages of using QR code. The amount of risk that one could take, is far lower. The risk areas are fairly well managed in the QR. There are, but it is much lower than possibly using a physical card and trying to make it work. It's much lower. What really needs to change is the whole acceptance and deployment of a QR, which means that how do you really now use QR code more effectively and make it available to possibly a fairly larger base of acceptance? That is most important, right? So there has to be a strategy and an execution plan to increase the QR code deployment into a large variety of merchant types, categories. And more importantly, take it down towards the bottom of the pyramid. As you get further, you expand into tier 3, tier 4 cities in terms of their ability to use that more effectively. Today, that is what is going to make a game changer. Today, tier 1, tier 2 cities are not going to be the benchmarks. It is creating the digital inclusion at the tier 3 and tier 4 cities that is going to make the game changing. And that's where I believe that we have a great opportunity for acceptance and deployment of QR code. It's simple, it's effective, it's fairly safe. So the ability for one to be able to make it more acceptability and convenience is what's going to define it. And I see that as a good future ahead for us, especially with Beam, especially with Visa, MasterCard creating their own interoperability. I think it's going to be fairly well accepted soon.
Right. What about, one of the issues when it comes to payments today, and wallets, for instance, have become very huge on that front. especially wallets like Paytm, etc. And then of course there's UPI, which is another real huge technological jump that has really helped propel payments in India. But what about really the need for interoperability, Uya, especially at a time like this, where people didn't often have access to cash because they didn't want to go to ATMs, etc. How can we build ecosystems to really drive interoperability that's very necessary in these payments?
So this is an area that has always lacked focus and strategy, right? The very fact that some few companies have really capitalized on an opportunity and built their entire franchise is great. I think kudos to them. The very fact that now what's happened to the central bank and the thought leadership in the government and the ministry have now started to realize that for them to create the digital transformation into the next level, interoperability is very key, right? Which is why now today you see two things are happening. The ministries are now coming together to create an inclusive approach of enabling all the payment service providers to create interoperable mechanisms or use platforms that allow interoperability, which is UPI. Similar to UPI, right? Why is UPI picked off? Because it is a platform. It is not a front end. It is a platform. The moment you create that interoperability, you're going to create acceptances. You're going to create more transactions and create more digital wave. Having said that, I also see the Reserve Bank of India really looking at a way forward with what they are calling as the umbrella entity. Right, that's a great segue now at this point in time, where if you look at some of the key areas of what the Reserve Bank is looking at from the umbrella entity, is all about innovation, is all about interoperability, and in terms of new segments to be covering and reducing systemic risk. There are 4 key areas, right? That's what they're looking at. So to me, I think the way the whole thing is going to move is, while there could be pockets of innovation coming in the front end, being able to create a sustainable, interoperable central infrastructure is going to change the game. I think that's where the shift is going to happen very soon, whether it's NPCI on the UPI, whether it's a new umbrella entity coming in with its own real-time payment capabilities. You're going to see that change. So that is where I believe the next 2 to 3 years will make the game changers for us.
That really sounds fascinating, and I really look forward to it. I'm sure Indian customers too will be able to experience a whole new level of innovation and therefore the ease of the use. Shifting back, a little bit to the banking industry itself, and really looking at, I want to look a little bit at customer experience, etc. One of the key things that your survey said that is, loyalty is very, very important. And what is happening today is that across sectors, customers are really shifting loyalties, or rather trying. For instance, let me give an example that I myself have faced. In terms of e-commerce earlier, it was just perhaps the Amazons and the Flipkarts, right? I never really used a service like BigBasket, but because of this pandemic and what happened, I've ended up using some of these new players. And now that I use them, I'm fairly happy with what I'm getting over there, because I believe that they have certain offerings, let's say in the grocery space, which they do better than some of the older e-commerce players. And again, the need is because you don't want to go to a shop. Now, when it comes to banking, keeping that same thought in mind, what will be the impact on bank as customers shift loyalties across sectors, and how can really banks leverage this new normal as an opportunity to build greater customer loyalty? And where can technology really help in reimagining and enhancing the customer experience?
This is a very relevant question emerging, right? That's what. So today banks have continued to create a lot of Me Too products, right? Whereas the front ends are being driven very extensively by new fintech companies who are creating B2C models that create more focus around customer experience, right? So if you were to take a step back to what I had said, what does a customer want? The customer expects convenience. The customer expects assurance. Now, if banks step back and look at this, any bank would say, you know what, I'm going to create an infrastructure where each bank would create an entire technology that is API-led capabilities in its infrastructure, which exposes its infrastructure and create an entire partner ecosystem, right? And I use the word very carefully because they have to create a partner ecosystem, which essentially enable their customers to seamlessly transact with these partners under probably their mobile app. Let's take it like that, right? Let's take a case in point. There is a bank A. If the bank A says, you know what, you open a today every bank opens online accounts, right? But that's only one part of the story. That's onboarding. But next time when you get into the app, are you able to fulfill your entire needs from within that app by creating segues into all of these? Which is, if you have a partner ecosystem of what you said, Big Basket or Grofers, or you have I see some new even milk delivery. There's so many different. Now, if you pick and choose regional such players or players like that who now can work under your framework, and the bank is able to create a seamless infrastructure capabilities for their customers to operate, what happens? The customer says, I look at bank as a super financial powerhouse, right? The earlier bank super financial powerhouse was, I'll create banking, I'll create financial needs, I'll create an insurance arm, I'll create a mutual fund. It is all about wealth. I think now that will shift a bit to say, banks say, you know what, you're being a customer, you take my app, under that app, you can do everything you want, including booking a taxi. Now, as you come out of this pandemic, you will see, I don't want to drive a car in traffic. I want to go inside. I go default into a bank A's app, and then I book for a taxi, and the bank is able to create some intelligence around it. Every day you go from point A to point B. Now, you're starting. Would you want me to book a cab automatically for you? If the answer is yes, okay, I'm holding a debit. I'm holding say X amount of money in my account. Go ahead, I'll book a cab for you automatically, and the cab is available to you. So now these experiences, now look at the shift the bank can create. Now that's where the loyalty factor comes in. Now, next, you say, you know what, at the end of the month, I go and buy a grocery and there is data. And I go and buy X amount of grocery that is available. How does the bank now play with its partners? How does the bank integrate with its partners to create the data, I would say, intelligence? Now, when you look at the data stack, it's the highest level now. It's about how do you apply the artificial intelligence. I wouldn't call machine learning, but artificial intelligence on the aggregation of data across for your customer, and how do you present it to your customer as an experience? That's what is going to retain a bank's customer's loyalty to the bank. It is not going to be, say, I'm going to do me to download my app and start doing transfer of money, start doing transfer of this thing. No, that's not going to help. Then it will be the reverse. The guy in the fintech organization, that app will get more used rather than the bank app. Then the customer has the opportunity to pay via Google Pay or anyone else. So I think that shift is very important. That's all I will stop. It's a long-winded, but it's about moving from being a financial powerhouse to becoming a customer-centric powerhouse. I think that shift is going to create loyalty factor, and that loyalty factor is what is going to help retain customers or attract more customers. It's about the underlying data and about integration.
That's really fascinating, Mahesh, and I imagine that what we're going to see and what the discussions that are happening in bank boardrooms about some of these challenges. I think we're going to see a whole new set of offerings from banks, and I think COVID again, that this is just another perfect example of how COVID has accelerated things, and what might have happened in 3 or 4 years has suddenly happened in 6 to 7 months. Now, you spoke about partnership, and obviously banks need to build all these new partnerships in place, whether it is with, let's say, a taxi player or with groceries player. And again, there are different challenges there when it comes to also privacy, data privacy, etc. But Also, when it comes to banks itself, as they upgrade their technology stacks in order to meet some of these new demands again, and we spoke about this earlier, a huge number of transactions, perhaps smaller ticket size, but vastly a greater number of transactions, etc. How should they go about it, and especially in this highly regulated space, where often buying is seen as a safer choice? Is this true? And if should they buy as a service or as a whole? How do you think banks and financial institutions can really work towards optimizing cost while retaining agility? So to put it in a line, perhaps, how can they focus on the core business of banking and perhaps leave customer touch points, which is all about experience, and perhaps which they don't have, especially in the case of PSU banks, etc., to third-party services?
I would say that the answer lies in what you just said towards the end. It's all about the bank's business strategy, right? It's all about the bank's business strategy, where it needs to play, how it needs to play, and where it needs to focus itself on. So in my view, a bank is in a business of ensuring that you have money of the customer. How do you grow that money for the customer while you enable a customer to be with you through the life cycle of the customer's, I would say, daily cycle. Now, to me, what happens then, a bank should effectively have its strategy mapped out to saying, hey, let the bank focus on its core, which is essentially saying, we would like to ensure that the control factor, the risk factor, as well as the market factors, market mapping is with the bank, right? All technology enablement, all forms of technology enablement should be with partners. Now, there should be more focus in how a bank really brings its partners to facilitate its growth. I think that's a shift. Now, and I'm using the word facilitate because if a partner is not facilitating the growth or is slow, then the bank should have the ability to move. The loyalty should not be say, I look at a 5-year horizon and then say I've lost my clients because the partner with whom I'm in contract with has not moved, right? So I think what is important for the bank is now to relook at its strategy. Its buy should be based on the decision of agility, decision of how its partner is willing to put money in innovation and to provide its service. That's very critical. That's where it should. Whereas the bank should focus on how do I manage risk, how do I manage the business strategy associated, what should I play with, where should I play with, and how do I enable my services as a very smart set of APIs, API structures, and microservices, those enablement. I think that's where it should. Beyond it, it should be essentially doing it as a SaaS model. I think that's where the games will change now.
When it comes to banks in India, again, what happens is that, there are different kinds of banks, right? There are, of course, the agile, high-tech, private and global banks, which offer premium customer experiences. They are the giant yet slower PSU banks who often face this challenge, might perhaps need greater partnerships with others. And yet, on the other side, you also have much smaller private and cooperative banks who may not be able to afford the best technologies or even the people really to manage these technologies and build some of these agile practices. Now, from a technology perspective, how do each of these sets of players really deal with some of the challenges that are thrown to them by this COVID-19 new normal, which has been highlighted in your survey?
So to me, I think, I always use that word that I see, even elephants can dance. Let's put it simple like that. So, and I see a great example in our largest bank in India, right? Largest bank in India probably has its ability to innovate far faster than probably a lot of the other banks. The experience may be slightly lacking. I agree to it, but its ability, its opportunity, and the way it has gone about presenting new capabilities is brilliant. So I would say that there is no inhibition in terms of how quickly can you change. I think it's all about saying what does any bank want to focus itself on and bring. It's all about partners. It's all about partners, collaboration, and the efficiency of managing those partners going forward, so that you don't start investing and managing the entire obsolescence of that investment. So today, if you look at a lot of these, whether it's a private sector banks, they've all started to unpeel their entire complex infrastructure to say, what do I bring partnerships on? How do I bring them? What is the framework within which they're going to bring partners on? And how do they govern that partner? Look at some of the nationalized banks or some state-run banks. Well, they are also running with partners. They are also, let me put it that way, right? 90% of what they run as technology infrastructure is run by partners, but they run by partners within their own ecosystem. Now that shift has to be there to say, you know what, I create agility. So I will have a partner who will create that agility for me to be able to make my changes faster and deploy it, to help me manage my risk better. The day that happens, it's competition. Then it's who gives the best experience, who gives the best service, and who gives the most financially secure. What's going to emerge beyond what you say is who's going to be the stronger from a financial perspective. Customers are also going to be scared about keeping money in banks, because they'll say, you know what, I may lose my experience a bit, but is my money safe where it is kept? That's very critical, right? In emerging world, the next 18 months, that's going to be very critical for any customer. You can't say X is giving beautiful, fantastic experience, so I'll go there only to realize 6 months down the line that X is gone and the money is stuck, right? Rather, they would less with some of this thing, and if that is over time building up, I'm safer there. So that's also, you have to play that game completely. I think it's going to be interesting, but everyone will play that game, will make the change. I think either it will be by force or by choice, but it will have to happen. Let's put it that way.
That's a very interesting observation, by force or by choice. I mean, that's how often businesses, and of course the pioneers, the leaders, are those who make it by choice and who get that right. I think that's something we keep seeing in business. I wanted to quickly deal with one more key aspect when it comes to customers, and that is really the entire issue of security. Now, even as, for instance, one of the things that has happened is contactless payments have boomed, and more and more. I remember, we've had, for instance, contactless cards since the last 3 years or so, 3 to 4 years. But you had to often tell somebody at a department store, if you were shopping, that do use that, right? Because people they at the counter, executive wouldn't really use it. But today it's by default. Everybody is using contactless. But security concerns also grow there when it comes to contactless. Also, when it comes to online and digital, even when it's non-contactless for larger ticket sizes, etc., there are obviously even greater fears of fraud, data privacy, and especially in this entire era of digital identity theft. So how can the industry really better earn customer trust around personal data information security and really go about building customer confidence levels when it comes to these new mediums, so that, again, that also will be key as we go ahead, as some of these changes become permanent?
So, good point, good question. Now, if you look at it, I mentioned in the start of our conversation, right? There are two pillars. One is the entire convenience part of the story, and the other part is the assurance part of the story. And assurance is all about the fact that if a customer uses any form of transaction, any form of, device to enable a transaction, how is he or she considering it safe and secure, right? To say that they are effectively assured that that transaction is in fact protected. So I think there is a gap there. In my opinion, there is a gap. And the gap is predominantly coming from two aspects. Gap is coming from an acceptance by the banks that there is a problem. First. The second part is a lot of education to the end customer, whoever handles it, to say how should he or she be handling such a digital transaction. So to me, I think there are fundamental infrastructural issues. When I say infrastructure, it is not physical servers, but core issues, which essentially mean that banks should now be able to put more and more investments in terms of understanding the risk aspect of digital technology, digital payments, right? So they should now invest those aspects and try to create the processes which are much more agile, nimble, and can also give more power to the customers to decide how they want to transact or they want to block their transaction, right? That is very critical in a retail payments. The other part of the story comes from a customer perspective, is to say the customers will now say, I know what to do with my transaction and how do I keep myself more safe. That's very important. And what do he or she needs to do? Today, there are very negligible amount of information that is very floating to the customer to say, you need to manage a contactless card better. How do you do it? Today, I have not seen anyone there. I keep getting shipments of contactless card to me. And those contactless cards, someone can just come next to me into my purse and take a POS terminal contactless enabled and can wish money away, right? Up to 2,000 is gone. But so that is where the customers need to know how to manage some of this. The customers need to know how to be protective of where they spend and how they spend. That's very important. And this is not for a tier 1, tier 2. It's all about as you go further and the acceptance terminals get better, it's an industry that needs to come together, and some more very stricter norms of how it is essentially delivered is important. I think that is not there today. Now, we are all talking of transactions, digital transactions, enablement, but in terms of how these enablements get triaged with the risk is very important, the risk management. So to me, it's a next wave that will happen. If you look at it, while the digital transactions start to take off, you will see both Central Reserve Bank and all these people coming out very stronger risk parameters, and hence issuers and acquirers starting to converge to say, I better do it. Otherwise, the losses that are going to come to me are going to wipe off my business. So that's going to happen. So if you ask me in the next 6-7 months, that's the way the focus is going to be.
One last question that I really wanted to deal with goes really beyond customers. It really gets into corporate banking. Now, one of the big trends that has happened thanks to the COVID-19 new normal is that even finance departments of businesses have really moved paperless. They've, of course, gone remote banking, and because of that, they've had to move to paperless. And this was something that was fairly unimaginable earlier. I mean, there were many departments that you thought could work from home, etc., but not finance. Now, what are some of the new opportunities, as you see it here, for banks to provide new services? And what really shows up on the threat matrix as digital really replaces paper trails?
So it's very interesting because, what's going to happen is banks would need to decide as to what they retain as core. And this is, again, one thing. So when you say digitization, it's all about putting money behind automation. It's all about creating that entire infrastructure that is much more customer-centric to make it. I'll give you a classic example. Now, if you see, every bank has started enable what didn't happen 2 years ago, 18 months ago, today has become necessary. You want to onboard a new customer, right? Earlier, you had to walk into the branch. You had to go fill up a form, give 4 or 5 of your credentials to be able to, for you to do it. Today, what happens? Today, which bank wants you to still do that? They just have everything on a single app. They allow you to go through it, and they store everything digitally. Even the bank's back office processes are near digital. So it is about when you get into those kind of scenarios where banks now need to see is how do I protect that digital infrastructure? Because that means the credentials could be compromised if you don't manage that. Earlier, there used to be paper trail, but today everything is digital and today everything is online. So how do I create that security around that digital infrastructure, as you said, the threat part of the story needs to be fair, better managed. So they need to look at those aspects. Second aspect is when you start to share what is an emerging trend that is coming about is account aggregation, right? You're seeing account aggregation coming out, which means banks will start to share information about under a particular code of conduct. They will start to share information, which means that banks will now say, you know what, I'm not going to store a whole lot of information anymore. I'm going to have the base information. Rest all is starting to move to a repository, a common repository. And in our case, Aadhaar is starting there. It's just going to expand more and more, right there. So the way I look at it, to your point, Ivor, is all about saying finance departments and all these departments will, whether it look at finance departments, what do they process in a business? Typical, when they face external, it's accounts payables and receivables, right? Look at what they do. Forget about what they do internally. When they face off to their clients or their vendors, there is either receivables or payables. Now in that situation, it's all about how they are going to be agile, digitally secure, and make sure that payment has what we call it as is assured to them to say, with the moment I send a payment, it is received. And how quickly can I turn around that payment? That's very important. Any businesses, if they have to be nimble, has to be able to be in that space. So that's the way I look at it, Ivor. To me, I think digitization will force businesses to look at how they manage to keep the data secure, and how they expose the environments through set of APIs and technology enablement to their partners, whether it is clients or their partners. So tomorrow a super app will come and say, I'll tell you, I could imagine that you having, I don't see this mobile remaining the way it is. Why should it be? You'll have one or two apps, that's it. A super app will come and take care of everything. There is an account aggregation that will come on top of it. You say, I want to know my balance. That's it. What will happen? Now that app will have the intelligence to say where all it will have to go and take all the balances and aggregate and come and show you. Now you know what's your universe of your money, and hence you know how to spend it. Now you buying something, you find, I have bank A has only X money, but bank me is Y. And if I have to buy, I have to deduct from bank A X and bank Y some X money. Now, an app is going to be able to do it soon. That is where the digital and everything is going to change. That's where you're going now, the agility of the businesses will now define it. So you see some very fundamental changes happening very soon. And that's the differentiator plus the royalty factor that we spoke about. They're going to make the change for it.
Well, Mahesh, it's been fascinating really talking with you. I think we've covered so many aspects, and there's so much to take home over here, right from automation, how it's going to increasing automation, how it's going to change the fact that this is no longer about a tier 1 or tier 2 story, but really a tier 3 and tier 4 story that banks need to be really focused on. How they need to either, they'll have to do it whether forced or by choice, and therefore what makes more sense, the need for interoperability, and of course what you spoke so well about the need to really focus on digital security, get that right, and also understanding how all of this will finally come to the customer, the front end, which will be these super apps and not the way we imagine banking, another ways we see banking today. I know that COVID has really accelerated change, brought about a whole lot more faster, and from here I think we're going to see a whole different world of banking, and I just want to thank for helping us see this, for helping us understand it, and hopefully I think banks also will have a lot to take away from this conversation. Thank you so much for joining us today, Mahesh. We really appreciate it.
Hey, thanks, Ivor.